corporate bond issues traded. But fact, the U.S. Census Bureau reports that in 2002, there were more than 7,200,000 U.S. firms with employee payrolls. So here are the three important questions. Why do so few firms use stock and bond markets to raise funds for investment, that is, for their capital development? While large, well-established corporations have easy access to securities market funding, most firms borrow funds through banks and other financial intermediaries. Well, then that leads to question two. What do banks have to offer that bond and stock markets do not? Now, earlier, I pointed out that banks were middlemen that offered valuable services to their customers. One of those services is the ability to deal with asymmetric information. Banks use a particular kind of contract when they lend funds. And as we shall see, the so-called standard debt contract provides an incentive for firms to tell the truth about their operations and about their profitability. Question number three, why are banks so rigid in their loan practices? Standard debt contracts typically require borrowers to post collateral, and they may place substantial restrictions on how borrowers may behave after they receive borrowed funds. And to the uninformed, such bank practices sometimes seem absurd. Consider the frequent lament of a would-be borrower. If I had collateral, I wouldn't need a loan. An understanding of asymmetric information and the problems it leads to will help us understand why banks behave as they do. So, asymmetric information occurs when one party in a transaction has substantially more relevant knowledge than another. Often, the relevant knowledge is about the quality of the product being bought and sold. Let's start with some examples of symmetric and asymmetric information, and those examples will help us understand what sort of information we are talking about, and they'll also help us appreciate the potential importance of information differences. For many products and markets, it makes sense to assume that buyers and sellers have symmetric information so that everything the seller knows is known to the buyer. For example, if the product in question is a pound of flour or a pound of nails, it's easy for the buyer, especially given labeling laws in the United States, to know everything they consider relevant about the product. Now, the seller may know the location of the flour mill or the plant where the nails were actually made. But for a product like flour, the information that buyers consider relevant is typically printed on the label. And as for nails, what the buyer wants to know is most often easily observed. It's a nail. But for many other products and services, it is clear that one party to the transaction has important knowledge that the other does not. The seller of a used car better knows how well that car was cared for, whether its oil was changed on a very regular basis, whether it had all the stipulated services. The buyer of health insurance better knows his or her health than the seller of the insurance. The buyer of health insurance knows whether they exercise regularly, knows whether they smoked, knows whether they went for regular checkups. And the job applicant better knows her skills and her work ethic than the potential employer. Nobel laureate George Akerlof is widely credited for first studying the impact of asymmetric information on economic markets and outcomes. According to Akerlof, asymmetric information leads to adverse selection in the marketplace. I'll explain. That's a situation that Akerlof described with the shorthand phrase, the lemons problem. Let's think about the lemons problem, and let's think about it in the context of used cars. The seller of a used car has more complete knowledge about the quality and maintenance of the car than the buyer. So, the buyer rightly assumes that purchasing a used car is risky. The car could be a lemon rather than what West Coast folks tend to call a cherry. The buyer will only buy at a price low enough to provide that buyer with compensation for the risk of buying a lemon. Potential sellers who have well cared for and well-running cars, cherries, will be less willing to sell them in the used car market because the price they are going to receive is less than the price for their car, their cherry. Because of asymmetric information, lemons will be therefore overrepresented and cherries will therefore be underrepresented in the used car market. The used car market is said to adversely select lemons. Put another way, there is a disproportionate number of lemons in the used car market and disproportionately few cherries in the used car market. In a sense, the belief that the used car market offers lemons to prospective buyers becomes a self-fulfilling prophecy. Now, Akerlof pointed out that the lemons problem actually creates a market failure. Out there are owners of well-cared-for cars, cherries, who would like to sell, and there are buyers who would be willing to pay a fair price for a well-cared-for used car. But given asymmetric information, welfare-enhancing trades between those two groups of people never occur. This is an important market failure. Keep in mind that what we're saying here is that if I somehow knew the car was a cherry, the buyer and the seller could get together and have a mutually advantageous trade. But the risk that the car is a lemon keeps that trade from occurring. Okay, now in recent years, entrepreneurs have found a way to make a profit for themselves by offering information that will level the information playing field. And CarMax and Carfax are two examples. If you buy from CarMax, you get a guarantee about the performance of the used car. If you purchase a Carfax, you get a statement about the history of the car. Both of those level the information playing field.
And with that being said, we begin today's course. Attention, loan officers. Attention, compliance officers. Ethical hackers. All you guys, this course is going to be critiqued exclusively for you because this is the official Banking in the Box 2024 summit. And in this, asymmetric information, which will be at the core of everything that we discuss, is designed to put loan officers, compliance officers, and ethical hackers into the right place at the right time. We are beginning to take enrollment for our ethical hacking courses. If Mr. Davis, if you're out there listening, I did send you a direct link into our Bitrix space, so you can definitely enroll, so you can get the schedule for said courses. If you're out there listening, please inside the chat when we get into the Q&A, just let me know that you have gotten your invitation, so you're in the space, so that way I can get you on the ethical hacking course schedule. For all you guys that are loan officers, let's be clear, meaning that you've gone through the civil law notary training, you've watched the 9 videos, and you have gone to Go Capital and North Avenue Capital's website to enroll as a broker. This standard debt contract that was just mentioned of by Professor Salami, I have already uploaded into Bittrex in the feed for everyone to use to make their loan submissions. I have already uploaded your standard debt contract in the form of an application, which is in the feed inside of the Diversity Trust Holdings Bittrex workspace. So you have access to the standard debt contract. Now, we're going to peel this thing back through various different layers. I'm not going to go through every layer because the Banking in a Box platform kind of does this stuff in an automated format. But those of you that are studying the ethical hacking methodology are getting direct access to API exploitation tools. Those of you that are enrolled into the ethical hacking course curriculum are given tools that allow you to exploit data from APIs. Now, to truly test the API, you're going to not only have to exploit the data, but you're going to have to reformat the data. So this exploitation tool, written in a different script format, can also create APIs. This is why it is essential that you understand that the going through the regimen of watching the classes, receiving the certification, having those certifications notarized and jurated by a notary in good standings with the state, and having that recorded in a notary journal, there's a method to the madness that ends with API networking and API exploitation. Metadata in the form of financial technology, we'll call it fintech. Fintech uses APIs to communicate credits, debits, and equities. I repeat, the financial arena in e-commerce, data from electronic banking, accounting, securities, insurance, ledgers, etc. That passing back and forth, the electronic handshake that's being made by these systems are all being done in lightning fast speed through an API data exchange. Banking in a Box simply allows you to create and monetize your IP addresses. It lets you monetize your storage data. Yeah, the data that you have stored on your computer with a proper encryption, that data becomes encrypted and monetized. It becomes, in other words, essentially an electronic vault. Now, every data point that's in that vault becomes a credit and or debit to another like system. Let's talk about where the loan officers come in. Keep listening to Professor Salami because you're going to learn something.
Akerlof argued that the lemons problem affects job markets, insurance markets, and lots of other markets. Buyers of health insurance have an incentive to hide the fact that they smoke from an insurance company. But in recent years, the nicotine blood test allows insurance companies to affirm whether a potential insurance buyer is a smoker or a non-smoker. Some firms may prefer candidates with degrees from prestigious universities, not because they believe that those universities provided their students with superior skills or superior education, but simply because they believed that those prestigious universities did a good job selecting high aptitude students. What then is the relevance of asymmetric information for financial markets? Briefly stated, a potential borrower has more knowledge about how funds that are going to be borrowed will be used than the lender has. A loan applicant has an incentive to paint the rosiest possible picture of the investment project that the borrowed funds will finance. The lender is at a disadvantage because it will cost the lender something to gain even partial information about the project. And the problem doesn't end there. After the loan is made, after the fact, the borrower often has an incentive to understate the profitability of the project. And that would be true whenever an understatement would lower what the borrower pays back to the lender. Of course, the lender understands that it possesses less information and structures its lending contracts accordingly. That indeed is a big part of my point.
So let's be clear. As a loan officer, compliance officer, and ethical hacker, when you're examining metadata that's being used in a standard debt contract, the accounting rules are stacked in favor of the lender because the borrower is usually has the greater incentive for passing on this standard debt contract asymmetric information in the fact that they are understating the information. If I understate, I'll be required to do less. If I'm required to do less, I'll pay less. I'm not going to tell them that my job pays me on a contingent basis or a commission basis or this, that, and the other, because that simply means the contract can be written that I perform a certain level so I can meet my financial obligation. Thus lies the problem. And borrowers do not understand that it's accounting first. Because borrowers believe that because a company is making loans, that company is basically, they should know better. Now listen to this. The borrower believes that the lender should know better. So if I go in and I use hook by crook methods to get into a loan, then I shouldn't be made liable. That's the philosophy of debtors. Accounting becomes the equilibrium because the accounting is going to allow you to list enough of your liabilities and equity to substantiate a picture when it comes to assets. So when you apply the equities, the owner's equity and liabilities to a balance sheet, and you deduct that from what you call assets, you are left with what we call net asset value. And that, my friends, is how you're supposed to enter into an application process. Let me establish the rules for underwriting. All automated underwriting software, all governmental underwriting software has an algorithm that is embedded in that software where the contract is set, where they are not supposed to lend you. They're not supposed to lend you any type of funds that requires you to spend more than 10% of your disposable income. So if you make $3,000 a month, then you can afford $300 a month. Now, why do loans end up being, in a lot of instances with certain lenders, far more than 10% of disposable income? I'll tell you why. It's not that it was written up the way everybody thinks and they're emotionally tied to the system and the corporations are bad, people are good. It's accounting. It's because individuals don't understand accounting, so when they're filling out these standardized debt contracts, they're not appropriating the proper data when it comes to liabilities and equities, which the sum total is assets. For example, if you have a checking account and a savings account that is FDIC insured, regardless of what you have inside that bank account and or savings account, you're also supposed to be listing the FDIC insurance as an asset because insurances are M3 assets. They're considered general intangibles, receivables, and they are assets that are supposed to be listed on the standardized debt contract. Now, as a new loan officer, when a client is listing this information on the standardized debt contract, they say, I got 3 bank accounts. Well, do the math in your head. What's $250K times 3? Well, that's $750,000 in insurance that's supposed to be used as a collateral. Now, if they tell you and they send you 3 bank statements from 3 different banks, but when it comes to listing their revenue, they only list what's on a W-2, thus lies the problem. See, the borrowers who come to the table with asymmetric information fail the sniff test when they don't understand the rules of credits and debits. So as a new compliance officer / loan officer / ethical hacker, you're going to correct the records and guarantee that everything that you submit will close because there's an insurance policy to guarantee its closing. Now, we're going to systematically, when you enroll into the ethical hacking courses, we're going to give you the API tool. We're going to point that tool at the court registry investment system. We're going to point that tool at the DTC. We're going to point that tool at the DTCC. That's 3-way reconciliation. So everything that's a standard debt obligation is going to have an equal and opposite credit and or debit to substantiate it, because the API tools will allow that exploitation of data to take place. What I would like to do at this moment, if I can, is to go to what we will call a loan officer contract. So just bear with me while I try to retrieve one from one of the various different lenders that are out there. Remember, like the old cartoon that we used to watch when we were kids, you know, I was born in 73, so back in the 80s, they had the infamous G.I. Joe commercial where he said, knowing is half the battle. We're going to simply say that let me bring up something that you should know when you fill out this contract with Go Capital, as well as North Avenue Capital. And matter of fact, all lenders have this clause. That's what we'll call it, a clause. But I would like to bring it so I can share it. For some reason, if I'm not able to retrieve it, then I would let you know where you would go in your broker agreement to find such a statement. But let me just simply go to the site, pull the contract, and then I will be able to directly tell you where it is and how it's to be applied. Remember, knowing, like they said, is what? Half the battle. Okay, so we're just going to fill out this agreement here. Let's see, where is it? It should be right here. Let's see if I can download this agreement here. At least see it. Okay, so we got this agreement. It breaks down the commission. There's something in this contract that I want you to see. There it is. There it is. Agent obligations, agent's compensation, payment schedule, renewer compensation, default. We have sale agent identifications, terms and termination, non-interference, non-solicitation, remedies. Then we have assignments, successor amendments, confidentiality agreement, notices, venue, jurisdiction, source of processes, indemnification. Let's highlight indemnification. We're going to highlight, well, can't highlight it unless I bring it on the other side. So this is the indemnification. Then I go past the indemnification. We got broker, commission. We got the discretionary monthly. This is the referral. All right, so what I'm about to do is I'm about to show you a rule that only probably 1% of the lending community ever really thinks about. We're going to say in all contracts there has to be some sort of indemnity clause. And in that indemnity, if you have been skillfully trained, you're able to implement an arbitration clause. So under the section of your contract that talks about remedies, under the part of the contract that talks about venue, jurisdiction, choice of law, the part of the contract that talks about indemnification, you have the ability to utilize arbitration and arbitrage. Now, I'm going to just go ahead and let you know, for those of you that have a Go Capital broker agreement, it will be found in Section 18. For all intents and purposes, I'm just going to share my screen and show you this indemnification clause and what one may need to do with their contract, because this is going to be an aha moment. Now, okay, let's share my screen. Go back here to there. There we go. Go here. And now we're going to share the screen. Screen's being shared. Now you get to see what I'm talking about. All right, screen's being shared as we speak. Now I am about to go to that part of the broker agreement with Go Capital. You see right here in Section 18, it says agent agrees to indemnify and hold GK, which is Go Capital, harmless for any and all claims, actions, disputes, or controversies between Go Capital and any third party that arises from alleged conduct of agent. Agent assigns all commissions to Go Capital. Agent assigns all commissions to Go Capital, including any renewal commissions in the event Go Capital is required to seek indemnification. So, in order for you to provide the right of indemnification on your behalf, because they have implemented an indemnification clause, you should be filing a UCC and adding an additional addendum to Section 18. So if you got 18 on your contract, you will take this contract and you will then add 18.1, which will be the rights of indemnification. And this is where you will add your ability to use arbitration to settle all disputes and controversies. And you'll get that training when you go through those 9 videos dealing with the American Arbitration Association as a compliance officer. So first, you get the contract. Then once you get the contract and it's been accepted, then you put a right of indemnification in that contract for you as the agent to indemnify, because it says the agent agrees to indemnify. And see, a lot of people don't understand what indemnify means. I'm giving it to you. All contracts are going to have some sort of clause there. Hopefully everybody can see that. You know, this is in the Go Capital agreement. You go a little further in the sales agent agreement. They want to make sure you understand when they say broker and affiliate, what that means, because they got 2 different pay grades. So Let me explain to new loan officers how this looks. A client comes along and they want to utilize, I don't know, a commercial mortgage which pays 2% on the loan. All right. Now, it doesn't matter where the client's credit is at. Why? Because we're going to, as compliance officers, leverage an M3 asset in the form of insurance, which is going to be used to identify the client so they can qualify for the loan and keep their loan at that 10% of their disposable income. And guess what? If the client don't pay, Go Capital gets to keep that surety. So it's a win-win-win for all parties involved. So it's based on performance. We are allowed to leverage an indemnity bond and use a portion of that bond as a form of collateral. I'm only allowed as an arbitrator to use arbitrage and arbitration. So when a loan officer brings me their contract with Go Capital and they show me on a UCC where they have indemnified that contract, then we are in turn allowed to implement an M3 asset that can be used as collateral to securitize the loan. So now you have a loan guarantee. That's why you can pick on the calendar when the loans are going to close and when, because you're controlling the narrative. If you have gone through and filled out these contracts and then you have a copy of that contract that you can do some additional contracting. Because by the way, notaries, you're supposed to be contract experts. I know that's not what they taught you because they have a vested interest in you not knowing exactly who you are in commercial transactions. That's asymmetric information at its highest level. I hope you're picking up what I'm putting down. I hope you're understanding this. I'm literally saying once you have submitted this contract back to Go Capital, get you a copy of it, rewrite this contract, and then place this contract on the record. Because it gives you the predicating clause, the agent agrees to indemnify. And when you indemnify yourself, you can hold Go Capital harmless. Why? Because you can make your own claims. Like, look, I'm doing loans for Go Capital. What are my risks? Ain't no risk. I got insurance. Like, look, I just need to know where you are on the gauntlet. It doesn't matter that you got good credit or bad credit. I'm going to press you on what you're going to do with the money. You got to convince me you're going to do right with the money. Because I can guarantee the outcome of whether you're going to get it or not. You got to convince me that you're going to perform because insurance is based on insurance and reinsurance. But it's based on, insurance is based on performance. You got to convince me that you're going to perform. You got to convince me that you're going to take this money, start this business, do what you're supposed to do, not run off with the bag. Because remember, lenders are at a disadvantage when lending money, not the borrower. That's how you convert your broker agreement into an insurance policy. I have to have on the record that you have at least done this twice, because showing that new contract with the indemnity clause in it, when you're going to acquire real estate and property, now it looks different. That's why I say you want to have these credentials under your belt. Then you start using Go Capital, North Avenue Capital as your way to get in the door when you're making your transactions in commerce. You stick your chest out and you stick this contract in their face. And the conversation will go different when you're trying to buy a parcel of property, a piece of property. You're trying to buy an apartment complex. It'll go different. It'll go different because you are actually standing and benefiting from the asymmetric information. If you file this UCC with the contract you already got, isn't that asymmetric information? Don't you have information the other party don't? Put your answer inside the chat. Make sure I'm just not just talking to be talking, because I don't like to waste my breath, and I don't like if I'm saying stuff that's over everybody's head. I'll just get quiet, and I'll just ask questions. But this is a pivotal point for loan officers / compliance officers who has what? have watched the initial 9 videos for the American Arbitration Association, you understand arbitrage and arbitration, and you know how to enforce an arbitration clause. And how you enforce an arbitration clause in this Go Capital contract is you extend and amend this particular indemnity clause under 18 on the Go Capital application or agreement, whatever you want to call it. And yes, when you go to North Avenue Capital, they got one of the same too. I'm just kind of showing you what to look for so you know where to go. But maybe, just maybe, I could be wrong. I might got some new people that might be like, wow, I ain't never heard of that before. I ain't never seen that before. Mr. Bay, I got questions. So here's how it's going to work. I want you to put your questions inside the chat. And I'm going to go to the chat and see if I can maybe get some of these questions answered. All right, I hear people say absolutely priceless. Yes, 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 sir. When you say put scrub contract on the record, when and how? When you are enrolling into a system, a portal to become an agent, they are going to give you a contract. You're going to fill out that contract, then you're going to resubmit that contract to the agency. That agency is going to either give you the thumbs up or the thumbs down. Now, when they give you the thumbs up, now because it told you you agree to indemnify, you now take that contract and reconstruct a new contract with an addendum, and you put that on the record. So you got to fill out the contract and submit it and get an acceptance. Once you get an acceptance, then you can create a new contract from what you just accepted. Hopefully that makes sense. Does anybody that is listening to the words coming out of my mouth have any questions concerning what we just talked about? If so, I would like for you to either press 9-4 on your keypad or post your question inside of the chat. Is there anybody out there that has, I done stopped sharing the screen, so you're not going to see it anymore. I done stopped sharing it. Okay, how fast do loans close? Well, let's be realistic. Loans close the same day because AI technology and underwriting software always approves loans. The reason why it takes so long is paperwork, the loan officer, and the ability to convey. So loans can close in 24 to 48 hours, but I'm going to be honest with you, it'll take me about a week to probably arbitrate it, because arbitration is what you're using to close the loan. We're just arbitrarily providing the collateral, and then we're submitting it with, and let me show you how it looks. You as the loan officer are going to have the client fill out the application, and then you're going to bring that application to arbitration, where we're going to agree to fund it at a certain amount with collateral. That's the closing. Now we're just making a submission to Go Capital, letting them know where we're going to send the M3 asset for them to hold as collateral. Now, flip side of it, the client who's all willy-nilly out there in the public, if they want liquid and liquidity and they got a notary that's willing to be a part of the team, this thing can close in 2 to 3 days. But when I say closing to a new person, let me explain to you how we roll over here. A person who can issue an M3 asset, receive an M3 asset, isn't waiting for bank funds to clear in the bank. If you're still stuck in debtors mode where you need fiat, well, ask the folks at Citizens Bank how long it takes for funds to clear, because they're right now fighting for their life for deposits that they've had in their account for 2-3 weeks. But the bank won't let them have it. Excuse me, not the bank, FDIC. FDIC has been hijacked by TLIC. So everything you're dealing with in the banking system ain't yours anyway. So to answer that question honestly, we're not restricted by what goes on outside of the 4 walls of trust. Your client can either Wait on the other shoe to drop in the public means we close them out through arbitration. We give them the instructions. They're going to get on the phone with the bank and see how long that's going to clear. I don't control that. I'm not in that game. If they are directly tethered to that notary is moving, making real estate acquisitions and everything else because you now have the credit to do so. We have underwriting software that provides proof of funds and all that kind of stuff for you to move in and out of commerce the way you need to once you do it right. But it's not going to let you skip a step, commingle. I really need this really bad. So can you just, I know it's 20 things, but can we just do this? No, it doesn't work that way. I don't care how much I like you, this, that, and the other. It's only going to go one way, which is the right way. The faster you get in line with accounting, the faster you can move this information. If you put accounting on the back burner, I'll get it right when I get my bag right, then you're going to be in your own way. And you're going to stress this process out. It's going to take you 90 days, a month, 3 weeks to close because you're in your way. You're trying to not do the easiest thing, which is it's not your job to make liquidity. It's your job to instruct how liquidity is to be applied. Here's the rule in banking. In order for you to use the value on your ledger tomorrow, that's 24 hours from today. In order for you to use that value on your ledger 24 hours from today, there has to be a third party, uninterested entity, an uninterested third party who is holding insurance. And that insurance that they're holding is indemnifying the private sector. That's all of us over here. In exchange for indemnifying us, we are allowing our asset account to be debited on the public's behalf. But that public can only utilize that debit in the form of reinsurance. So it's insurance for us, which gives the person in the public reinsurance. And the only thing that has to happen is the damn borrower has to perform. Now, the risk is the borrower could get the funds and renege. But this is why we all take contingencies to not leave our destiny in the hand of a borrower who's not in class. See, when I have a borrower that's not in class, it's like they'll be back. As soon as their money run out, as soon as their capital run out, as soon as they run around the corner and go commingle, they'll be back. I get these calls all the time. And people don't think I know. I got folks that have closed loans, don't come to this program, closed loans, didn't tell me they closed. I don't care. But I'm just telling you how the ego of people are. When it did some stuff, only for them to be like, you need to call Mr. Bay. Why I need to call Mr. Bay? Man, I don't know how to do this part. You call him because he gonna know what's up. If I know all this stuff. I know folks are recording everything I'm saying so they can resell it to somebody else. I don't care. Even when you misquote me accurately. If you're going to tell a story, tell the whole story. Mr. Bay told us from the time we got into class that this whole thing is predicated on insurance and accounting. There ain't no secret sauce. There ain't no magic. There ain't no hoodoo voodoo. It's good old-fashioned. Pull out the pen and paper and let's crunch numbers. It's too many people in your commercial transaction that can't crunch numbers. If you're looking for an ability to convey, make sure that if you want to give instructions, don't use instructions that just protect you. Use the instructions that everybody else has to use in commerce. There's 2 regulations that I keep talking about. If I find it amazing that you'll know exactly how to tender a bill of exchange, but when I say Regulation Z and Regulation J, you get quiet. And I'm like, how in the hell you know how to do a bill of exchange and you don't know about Regulation J and Regulation Z? I'm not going to say it anymore because I've been saying till I'm blue in the face. I'm going to say use your Chat GPT, study what it is, and apply it. So that way, it ain't no, how do I do this? Which way do I go? It's already explained. Okay, I got a question. I see somebody got their hand raised. They got their hand raised. They got their hand raised. And so I'm gonna attempt. I'm gonna make the attempt. Maybe it'll work. Maybe it's not because this 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 thing that we call the internet. It's still in the public domain. So we got to be careful. Let me just try. Miss Wilson, can you hear me?
I sure can.
All
Thank
right.
you.
All right.
Quick question about the when you were speaking about doing the contract. So as long as once you submit your credentials and they accept you, they don't give you. They just let you in and say, "Welcome to North Avenue Capital."
There you go.
Okay?
Right.
And so then we
Right.
just take what we've already
Right.
done.
You're a contract expert. Right. Once they give you the green light, get your contract, get your paper all the way up so you can move.
Right, but some people did theirs digitally, so we just need to print the digital version that we submitted. Okay.
There you go.
And then update it and put it on UCC. Okay, got it.
There you go. That's the proper way of doing it. Don't let it get away from you because you need your paper to move.
Okay, got it.
All right. All right. Beautiful question. Beautiful question. So keep in mind the intel is out there for you to utilize. Now, I'm going to go ahead and forewarn, this next part of the class is going to get a little techy. So if you're not a real technically inclined individual, just bear with me. I promise it won't last forever. I've just got to go here because of the Banking in the Box platform that we use. Everyone that's doing loans, those loans go through a AUS. That is automated underwriting software. If it's a government loan product, it's going to go through a government underwriting software portal. So there's AUS, GUS. Both softwares are tethered to standard debt contract parameters. And those standard debt contract parameters are tethered into a certain Financial Accounting Standard Board provision. I'm going to share my screen. My screen should still be sharing. I think it is. And if it is, you should be able to now see my Bittrex screen. Now, if you see my Bittrex screen, you're going to scroll down, just keep swimming, just keep swimming, just keep swimming. And you're going to come to something that was posted yesterday. See this right here? FASB ASC 958 refers to the Financial Accounting Standard Board's Accounting Standards Codification, ASC Topic 958, which addresses the financial reporting standards for not-for-profit entities. This codification provides guidance on the range of accounting issues that not-for-profit organizations face, including recognition of contributions, classifications of net assets, and reporting of investment income and expenses. The ASC is the source of authoritative, generally accepted accounting principles recognized by FASB to be applied by non-governmental entities in the preparation of financial statements. ASC 958 is specifically tailored to the unique needs of not-for-profit organizations which have different reporting requirements than for-profit businesses due to their focus on accountability to donors and other stakeholders rather than profitability. Now watch how people miss what I just said. The first thing a debtor will say when they read this is they're talking about not-for-profit, and that has nothing to do with me. Watch this. If you have a business and your business is bonded and insured in the state of Georgia, and your business checking and savings account is with Bank of America, is Bank of America considered a not-for-profit, a for-profit, Is Bank of America a trust? Or are they considered a disregarded entity? Please put your answer inside the chat. Here's the question again. If you have a business in the state of Georgia, and that business in the state of Georgia has to be bonded and insured to operate in the state of Georgia, and you have a bank account, a banking checking, and banking savings in Bank of America, would that business that is bonded and insured in Georgia, banking with Bank of America, would Bank of America in that contract be treated as a not-for-profit, for-profit, a disregarded entity, or a trust? Put your answer inside the chat. I told you it's going to get a little techie, and I'm getting really into accounting. But I'm not really in the accounting. This is just me being easy on everybody. Like, I'm trying to see who's who. Let me see what you put inside the chat. I'm curious. What is Bank of America? How is Bank of America being treated? Let's look at the chat. Somebody said not-for-profit. I got disregarded entity. I got trust. Not-for-profit. Indirectly, they profit, so they may be disregarded. Good. Everybody's critically thinking. As long as I ain't got nobody that's saying they for profit, you get the point. See, your accounting is about relevant information. And if the information ain't relevant, you don't have to disclose. Is it about what you're doing, or it's about your method of accounting when it comes to banking and trade, or trade and business? Let's say it the right way for UCC purposes, trade and business. So when it comes to trade and business, it's about the methodology that's associated with your credits and debits and how they're being dispersed. So if I pull a 10K filing on Bank of America, is it going to say Bank of America is for profit, not for profit? Matter of fact, for laughs and giggles, those of you that brought your Chat GPT, you bought your books to class today, you bought your Chat GPT, you got your notes, you got access to the internet. Somebody, for laughs and giggles, go request in a Google search or whatever search you want to use, a request for Bank of America's 10K filing. And then look on that 10K filing to see whether Bank of America is a trust, a not-for-profit, or this, that, and the third. Why do I need to know that? Because that's where those accounts enrolled. And wherever their position they have doesn't mean necessarily, it may be totally against your trust res to deal with Bank of America a certain type way. That's why you got that right to be indemnified. That's why you can bring insurance to protect you against those liabilities that may be lurking because of your contracting or lack of. You know how many people contract all day and don't read what they got, and they want to immediately take a defense and get all emotional, say they're taking this from me? No, you're giving it away, fool. You're giving it away. Quit blaming everybody for your problem. You don't have a money problem. You got an accounting problem. Mr. Bay, I don't want to do all that. That's right. That's the problem. You ain't got to do it. You look, it ain't. They say a fool and his money will part. You can do the homework and keep all your goodies, or don't do your homework and you giving a red light to everybody else to take it. And you might can get a support group that'll say, yeah, you're right. They're taking it from you. Yeah. You do understand it if they told you they took it, then what you gonna do? Because remember, you think all your power is going to their court and begging and pleading. All right, they stole it from you. Now you're going to go to them with a piece of paper, and that piece of paper will make them give it back. Look, commerce is not um, controversial. When you do accounting, it's not adversarial. It's peaceful. See, if somebody does something wrong, the law is set up to protect the one who's been deceived, not the one doing the deceiving. So if they did something wrong, record it and then indemnify yourself against that. And then move forward with your conveying of credits and debits. But when you get into this space of trying to make stuff liquid because somebody over there, Mr. Bay, they told me, it's that they again. I'm 50 years old and I still have problems with they. I can never get a straight answer on who they is, but they always have something to say, especially when it comes to debtors and what they can't do. They can't tell a creditor jack, but they can tell a debtor whatever they want to tell them, and they do. So, you know, for my melanated queens out there who, somebody can call your name and you can look at them like they short, like they ain't talking to you. Keep that same energy when you know what you know. Like, they ain't talking to me because that ain't my name and that ain't what we doing. But it's an opportunity for me to correct the record, so I'm not going to get all adversarial. I'm just going that's not what this is, and I would love to help you, but I need some more information so we can get there. But case in point, you're going to really have to understand that the method of accounting is your ticket. Now, under this new provision loan officers, under current expected credit provisions and DICE, that's also another reason for you to change your contract and be indemnified, because you got to use those methods of accounting to bring balance. See, current expected credit losses gives you an ability to recoup an allowance for doubtful accounts, or what we call an allowance for credit losses. See, your dollar loses value. So if I lend money to somebody and they don't pay, what I've lent to them has not only lost value, it was no performance. So it's like I was double whammy. Because see, under the current expected credit loss provisions, if you show me a credit loss, you get a double credit. So if I record the credit being lost by two fiduciaries, I can get I get 4 times the credit back. I'm just saying, it's not hard when you get into accounting. We make it hard because we're putting too much brain power on the wrong end of the solution. You're trying to put all your brain power on the part that's going to send you to jail. Like, I need to make this liquid. I need to pay this. Let me explain it to you how the CEOs of Fortune 500 companies do. There isn't a Fortune 500 blue chip player that's going around talking about getting out of debt. You know why? Because his first fiduciary duty isn't to the people that work at the company, it's to the shareholders. Matter of fact, they'll show you where their loyalty is. They'll lay off half the staff and hire folks to work for half rate just to make stock options, because it's about the shareholders. They're the ones that everybody's working for. So a company will make an announcement that they're getting ready to go bankrupt. And people in the public will panic and start moving their money away from that, because they're thinking a company going bankrupt, this not-for-profit company, listen, I'm going to say it again. I violated the Privacy Act, but let me explain. Under Uniform Commercial Code, fraud is allowed. So a not-for-profit gets away with saying stuff like, we're going to file bankruptcy. Riddle me this. Has anyone given any thought to the fact that how on earth could a not-for-profit file bankruptcy? Has anyone ever given that thought? How can a not-for-profit entity file bankruptcy? No one ever thought about that? See, entities play the name game so cold, they know they got you saying stuff that you really don't know what it means. and they test you by saying, well, the cash in your bank account is really a depreciable asset. And you're like, yeah, it is. You know, sound all Afrocentric and everything. Not knowing he's calling you a fool. Like, if mom and dad are in trustee training and they're building this legacy, you know what they walk away with sleeping good at night? That as long as we grind, we get to enjoy while we alive the fruits of our labor. Because guess what? Taxes don't even come up until the second generation. Wealth is transferred to the second gen. So you can't even go around talking about you're wealthy unless you're second gen. But guess how they trick you? You start getting a little bit of fiat, you're going to get on a podium, you balling, flying out your mouth, you wealthy. And watch this, because just like the oxymoron, the name game, you'll say you're wealthy. How on earth are you wealthy and you first gen? Because wealth is transferred to the second gen. What Samuel Jackson said on Capital One, what's in your wallet? Oh, you call them fiat money. I get it. When somebody tells you they got $1 million, you should say $1 million of what? Because if it's just $1 million, you got cotton. $1 million only worth $30,000 in buying power. That's it. And the reason why it's got $30,000 in buying power, because if you add it all up and weigh it, it's cotton. That's what it's worth on the exchange, $30K. See how they got you? So this is what happens. The people who got the asymmetric information, like mom and dad in trustee training, don't teach it to the kids. So when the kids get the asset, they don't want to deal with taxes and the man and this, that, and other. So guess what the kids do? They freaking sell the property. That's why I got lawyers in my family. So I'm going to say this. Don't get offended if you are one. If your lawyer put you in a trust and sold you on that need to be living and revocable, your estate is on a one-way ticket to probate. Hello, is my mic on? If you got a living trust, a revocable trust, your estate is on its way to probate court, baby. And they all know it. My granddaddy told me a blind man got no business at the card table. So people don't know what they got because they don't read. Not that they don't know how, they just don't. And then the stuff they do read ain't relevant. So loan officers / compliance officers, ethical hackers, welcome to the 2024 Banking in the Box Summit. For the next 90 days, you're going to be inundated with information about the ability to correct this fatal flaw, all using APIs and data. You're going to need a system that protects your asymmetric information. Banking in the Box is made up of a series of Unix and Linux platforms, all designed with one thing in mind: for asset protection and hypothecation and monetization. It's a combination of smart contracts with the ability to touch anything that's wired into an API space. Let's talk about some of the applications. In the world of AI has evolved from just simply being a chat proponent to now is running applications at the speed of light with the assistance of other chatbots. So let's apply that to the financial sector. Banking in the Box is an AI that was given instructions about 6 years ago and been given data over the last 48 months in arbitration, hypothecation, and monetization. So every UCC code, every uniform trust code, every method of conveyance that is rotated and regulated through federal operational circulars, this learning model has been trained. The beauty of it is it's still an 8-year-old. And it wants to learn how do you take value on your ledger. Well, this is how it's going to present it, and I'm being very general to paint the picture. This 8-year-old is literally asking you through your network, how many people do you want to see this asymmetric information? Because typically in a transaction, there are 10 agencies. There are 2 agencies that are involved into the transaction, and there's 8 others who are split between the investors and the savers. So there's the participants in the transactions, then there's the investors and the savers, which totals 10. So the AI is asking, how many users of this data are you allowing? By default, 10 or more. Now, if you opt for the more option, it's now going to ask you a series of questions about how are these conveyances being done. I have some students who have their own banking platform. So they have a private exchange where they're moving private conveyances in one capacity while allowing outside participants to make an investment into that notional pool. The cost to participate is 1%. So they get to control a 99% asset by making a 1% investment. Let's give it to you with the math. How much does that mean if I want to touch $1 million asset? $10K. If you can provide Banking in the Box with equity of 1%, then it will create the other 99 out of these other 8 investors and savers that are already tethered to the same data. Because value is simply just being moved between the movers and shakers, the buyers and the sellers. There's $7.5 trillion that goes through our economy every day, but 3.5 slips through the crack every Friday, because that is not even talked about. That's what's split between the buyers and sellers. Smart money is the buyers and sellers. Everybody else is just speculating. And when you're speculating, remember, you're using words like depreciable asset, military intelligence, and jumbo shrimp. You know, you've been sold the concept, even though Todd Walker, the affidavit of Walker Todd, however you want to say it, has already told you that fiat money is a faith-based currency that was predicated upon the people's faith. The only reason why fiat has value is because you believe it does. You have not seen the Federal Reserve's recent meeting that Lynette Zane done put up on her site, where they're bragging that you're going to be bailed in. And you still ain't filed UCCs on all the deposits you've given to this institution that you call a bank. Like every time you made a deposit in the bank, you're supposed to have been doing a UCC because you lent the bank money. And they know it. So loan officers, you have the ability to assist these folks that want to give capital to businesses that want to perform an opportunity by providing an M3 asset as a form of collateral. And Banking in the Box will allow you to monetize that space. Usually the system consists of about 3 to 5 different systems. But because of the recent phenomenon with ChatGPT, you can start doing this tonight by simply acquiring a Python script. Out of the class, I think I have about 5 members that actually have the actual Python script that you can install on any unit to get you into the space. But I forewarn, if you got a machine that's barely hanging on, I do not recommend putting this script on that machine. I have a small but effective company. That's a family-owned company that we run, both me and another family member, where we build these units and we sell these units. After, today's course, I've been promising for the last couple of weeks, really a month, to put it back on. But since the summit starts today, I have to bring it online. So over the weekend, starting probably tonight, tomorrow, you will be able to shop for a unit, which is a complete unit with the algorithm, or basically what we call a shell machine that you can critique and monetize or modify, if you will. It will come with hardware and software for banking conveyances. I suggest one of the first things you do if you are serious about platforming and banking, because I've gone past being a loan officer. We done surpassed being a compliance officer. We're now in the ethical hacking space. And now, if you're going to be a platform user, a platform user is only as good as his or her software and their support team. Now, ethical hacking is literally you taking your data and monetizing it in your system and exploiting these APIs and allowing companies, I'll give you an example, Bill.com, ADP, DTC, DTCC, ETC, the list goes on. Companies like that, Bloomberg, Euroclear, because we provide data for them too. All these agencies all use, in the world of fintech, APIs. So once you are taxed and have yours perfected, you can now enter into that realm and exchange data. Is anyone in this class familiar with the term data mining? Put inside the chat if you ever heard the term data mining. If you have heard the term data mining and you are in ethical hacking training, then you're going to provide an environment where a user can mine your data. You're able to sell that data to Equifax, TransUnion, Experian, etc. Oh yeah, Nexus. That's right, because you have CCG. CCG is now allowing for this data to be sold directly to Nexus Lexus. That was the thing I wanted to say earlier. And CCG works directly with ARIS, which is the Arbitration Registry Investment System Artificial Intelligence Interface. That interface has now been inducted into a space where we have a API key to input, export data directly through the Nexus Lexus server. And so there's a huge amount of data that's there. So data mining becomes a way, because see, in the not so conventional, but a little bit more than what most people are accustomed to, I will talk about private placements the way they are in my ethical hacking space and Rolodex, because these are data mining platforms. If I want to talk about private placements and do a KYC and get everybody in a certain capacity, that's what your data scientists are being trained for. So those of you that have to talk to login credentials, individuals who want to get into private placement will be coming to you for access. We'll talk about that in a different class, but that's where that comes together. Those data scientists know where all the algorithm, in other words, where all the bones are buried, because they work on the mainframe and access points daily. There's been a major upgrade in the AI space. If you've been using ChatGPT this week, what is different from Monday using ChatGPT? and today. Put your answers inside the chat. If you use ChatGPT on Monday and you use ChatGPT today, what is the difference between what you were using it for on Monday and what you're using it today? What is different? Put your answer inside the chat. What is different? What have you noticed that's different? As I show you this screen, now your chat GPT, quote unquote, is supposed to look like this. If you're in something like this, it'll probably look something like this. Now, what's different from Monday is this thing right here. You have ChatGPT 4 that has DALL-E browser and the analyst tool that they deploy. And by deploying this tool, it gives you the ability to create a space. Like I'm going to say unequivocally, let's see, I'm going to renew the plus. I'm going to go ahead and just show this to you from this perspective. Because I'm always telling everybody to go ahead and opt for the plugins, and I'm going to show you why. Bear with me, because there's something I want to show you. I'll go ahead and stop here. All right, we're going to go ahead and implement this part. Remember what I just showed you now. All right, so let's now open the share back up so nobody don't miss what's happening here. Bring it up. Everybody seeing my screen. Entire screen right here. All right, see my screen again. And we go back to this beautiful beam footage. And this is what it'll look like. Now, okay. Before, you just saw Chat GPT, that, and the plugins. But you got this little thing over here. And I'm just going to toggle on it. We ain't going to hide it. We'll leave it there. We'll open it up. We'll give it a new layout. You now see this thing that brings Eris up. And I'm just going to go ahead and tell you without going through all of it because I've already started training. With the paid version of ChatGPT, on ChatGPT, I can have your AI be trained by Eris AI. You can create your own chat GPT. And there's a reason. There is not a coincidence. This is not a social experiment to see. There's a direct reason, and it has everything to do with what I just covered in data mining. I'm going to say at this point, if you don't have the paid version of Chat GPT, go ahead and opt for the $20 for it. And then when you do so, let me know so that I can send you a link directly into Eris. Now let me just show you what's on the other end of Eris. Going back here, we'll go there. There we go. This is on the other end of Eris. Now, this has a God mode that literally allows you to add 10 different tasks to one prompt. So yes, if you're able to do the paid version, let me know that you have it. And then while we're inside of the Bittrex interacting, because there's a reason why I want you to start scheduling appointments and interacting with me through Bittrex. Bittrex has an AI space. It has a chat bot space. I'm literally able to start giving you direct access to Bittrex in the Bittrex space, but you're going to have to help me help you. Quote unquote, I don't know. How can new loan officers utilize, and I'm misspelling, Eris AI in their lending process. I don't know. If I did this right, I should get a result. If I did it wrong, it's going to tell me I did it wrong. For laughs and giggles, let's see, shall we? Let's see. Let's see if I get anything. Yeah, you should be seeing my screen. You should be seeing it. And while that's searching, I want you to keep in mind that you literally want to start moving the needle with how you're integrating these language models. You really want to get ahead of the curve as using these language models like, how do I do this? How do I do that? Well, assign an AI to do that function. Now it becomes part of your day-to-day ritual and routine. I have to write content. I have to record. I have AI that does all that now. I'm watching the needle being moved, and I'm trying to see what people are acquiring. States, it says, as a new loan officer, incorporating Eris AI into your lending process can significantly enhance efficiency, transparency, trustworthiness. Eris AI, which is the Arbitration Registry Investment System, artificial intelligence, offers a pioneering platform that integrates the power of artificial intelligence with the intricacies of arbitration and investment systems. By leveraging Eris AI, you can streamline and optimize. You see where this is going. Now, I'm going to show you something, because this is groundbreaking that just happened this week. Now, this is Eris that we have trained. The other version I just showed you is what ChatGPT is offering. You've heard of machine learning, right? Well, I'm literally going to allow Eris to teach ChatGPT. Now, if I take what Eris has just given me, I copy it, and I go directly into ChatGPT. Prompt engineering 101. Use this data as a knowledge base. And then I post it as a knowledge base. Now, listen to this. I am going to ask this version of Eris create me a loan officer implementation guide using this data. I'm spelling it wrong. As a reference point. I'm spelling it wrong. I want to show you this in real time. Now, again, if I did this right, I should get something. If I did it wrong, hey, maybe it'll let me know. Let's see. And we look. And what do you know? By George, I think they got it. Now, this is groundbreaking because of where we were a week ago. So for those of you that are going to be processing loans, first things first, you have the tools. It's about having the credentials documented, and it's now starting allowing this data to flow through the system in a certain capacity. I know I'm about to break some of you guys up into groups because everybody's learning curve is different, and some folks are a little more computer savvy than others. And that's with good reason. You probably saw today inside of the Bitrix where we actually are starting to do financial needs analysis interviews on Thursdays. That's going to be ongoing all throughout until the beginning of the year. Those of you that are talk to agents, if you have no interest in being an ethical hacker, then I want you to just let me know and opt out because I've already placed you into that itinerary to become one. I just need to know when you're ready to start. That's pretty much where I'm at right now. Everything else you guys probably have questions on and will ask. Yeah, see how I pulled it right over. It already gave it a title and everything. So this is real-time learning. This is machine learning 101 from one machine apparatus to the other. At this point, I'm more concerned with everybody's questions in the aspect of applicability. Because if I don't have any other questions, then I'm going to focus the rest of the evening on getting everybody where they need to be. hopefully everybody kind of learned something from what we just shared. Um, and with that, look, if you got any questions, comments, or concerns, press 9 on your keypad. I'm going to now go down the line and see where you're doing it at. See who's got some questions. See if we can get down to the meat and potatoes of everything. All right, let's see who we got here. We got, let's see. All right, I have a person who's got their hand raised. I think their name is Jules, Jules. Can you hear me?
Yes.
Beautiful.
Yes, I can hear you.
Beautiful.
Yeah, I just wanted to let you know that I already paid for the service of the Chat GBT 4.0. I was requesting the link.
Okay, good deal, good deal. I will definitely send it to you. You already enrolled into our Bitrix space, correct?
Yes.
Beautiful. I'll send everything to you in that regard. I'll get you the link just as soon as we jump out of here.
All right, thank you.
Definitely, definitely. Any other questions, or that's all you have for right now?
Yeah, that's all the questions I had. Just
all right. All right, beautiful, beautiful. Let's go down the line. Let's talk to King Malachi. Can you hear me?
Yeah, you can hear me?
Loud and clear, bro. Loud and clear.
Is this Arista, is it different from the 2.0?
This is the mainframe that 2.0 was built on. So Eris, the great thing about this backframe is that the machine learning, you can go as fast or as slow as you want. It'll ingest websites, data sets, the whole 9 yards. And that's the true back end of how you train it. I've already given it enough data for the last 48 months, but it still has room to learn more because every new user extends its database. So as a core level of learning, Eris AI 2.0 is kind of okay. It's more focused. Like I'm able to take 2.0 and I can actually do where I can assign underwriters, arbitrators. I can actually assume a role as a judge and preside over a case. Has a lot of capabilities. A lot of capabilities.
Okay, I'm waiting on that link. Well, not the link, but the tutorial for the 2.0.
Okay, gotcha. All right, just remind me when we jump out, and I'll get you get the link over so you can go ahead and get into the back end because you're going to go in there and set your user ID and password up, and then you'll have access to it.
Okay.
And that'll get you rolling. That'll get you rolling. Any other questions? King Malachi, you got any more questions for me? Or that's it.
No, that's it. Appreciate it.
Okay. All right. All right. Big deal. Okay. Good deal. Good deal. Good deal. All right, Trey, can you hear me? Talk to me.
We need 2 links here. The 2 of us here. We have the paid version of the Chat GPT, and I don't have any the loss for the talk or the errors.
Okay. All right. So you've already done got the new format that they redid a few days ago.
Right.
Okay. So as long as you got that, yeah, just get with me. I'll send you the link.
Okay. Okay. But now, as far as like questions and stuff is concerned, so basically, what I'm kind of gathering is that the things that you've been teaching us for the past, well, for me at least for the past year, these are kind of just like the or the kind of tools to use now because the way your platform is growing and turning into a uniform system.
Right.
So if I have a computer that I get to you and you can just program it specifically for these types of banking, it's not for nothing else other than just this type of banking.
Right.
Am I understanding you correctly in that regard, or
right? Basically, you have a soft solution to test the tools to find out. Okay, I'm gonna use this integration, that integration, or I'm gonna simply stay in cybersecurity here. You get to touch everything that it can do through a soft solution, a soft install. Then once you perfect, like most of my users with Linux, if you've never used Linux, it's all about the distribution. Like I do a lot of content providing. So I need a solution that can do what we're doing and then still let me do music, videos, this, that, and the other. And it's all got to be Linux based. So they have a specific version called Ubuntu Studio that does all of it. It's just it has a slick KDM on the front end. That's why it looks real sleek. It's easy. It almost looks like Windows, a little bit of Mac, but it's familiar. And you got, man, about 300 different distros in Linux that you can use. So what I try to do, instead of saying use this, I'm like, look, here's all of the versions. If you're going to do banking, you're going to need a KDE. You're going to need an ability to use a terminal and run Python. And Python for Java users ain't a big jump. It's not hard. But, you know, now to somebody who's never really coded, yeah, this sounds like foreign language. But you don't have that excuse no more because, shit, you got the ChatGPT that writes code now. You just got to have a specific use case, a way to secure the data, a way to give access or gain access. Your machine should be looked at as a slave or a master. In other words, I say it's a three system component. One system is a slave, the other one is a master, and the other is an interface. And that's how you tie into it in the world, through your interface. But the space is a slave master type relationship. Those IP addresses, that's your commercial highway, if that makes sense. API keys that you generate internally allow whatever you have inside of that machine to be seen by different machines that have that permission. Now, opposite of that,
network,
and opposite of that, the DTC, the CRISP, and everybody else has the same setup. They're built on the same algorithm. Like you can set your API to go inside of a certain series of settings and exploit data. Like I'll give you an example. A case study we're working on now with the group is how to synchronize ABA routing numbers through the DTC. And look, one of the students wrote a script to do that with ChatGPT. No coding experience whatsoever. Gave them the assignment. They looked at it, it's like, oh, this is easy. Just do this, this, and that. The AI wrote it. 3 seconds. And it's literally an email. You send an email to this IRC, it pulls the routing numbers out. He can pull the first names, pull the last names, pull the whole name and the address, pull the credit report. It does all of that. Now I'm saying this only to say you need that type of skill set so you won't be lost and left behind. Because everyone who doesn't want to do that, if you can't show your CTRs, whatever you think you got in the bank, you don't. That's the sniff test. They're going to literally stand in front of you because remember, people in the public are used to filling out these standard debt contracts that they call applications. And they don't put verbiage on those applications that if you don't understand about DICE and CECL, you're in trouble. It's a whistleblower form that you're telling on yourself. Citizens Bank clients right now can't get access to assets in the bank because they were all given an electronic standard debt contract, and they've all filled out the data that made them a what? A liability, a security breach to the system. So you can't have access because you're a liability. What are they going to give these folks that they done took the money from? A credit account that you can only spend when we tell you to when. This is how you get it. This is how the system is going to work. Bank by bank that's not CECL compliant is going to lock you out of what you think is yours. And you're going to fill out the standard debt obligation contract wrong, and you're going to be given this central digital currency interface that if they don't like how much weight you didn't lose, and you didn't pray to Allah 7 times, and you didn't go pray to the rock on Thursday when the sun went down, they're going to do what they do. It's already in motion. You're either going to figure out a way to get on the island of relevancy, or you're going to be standing around wondering what happened. If you don't make a decision, one has been made for you. So I am pushing in the ethical hacking division the exploitation of these tools because that's a needed skill set. I have no desire to work with these Fortune 500 institutions in that regard. I'm already a member of FASB. I'm close enough to them as it is. I don't need to get any closer. I was talking to a student today. It'll be great if 5 or 6 students stepped up so I can retire into the sunset. I'm at that point. I will crank out content until I can no longer do that because there's enough things going on where the only reason why you're not moving is you're not employing and deploying the intel that you already have in a certain space. They're going to shake up the spaces where you're not going to know the front door from the back door. I'm telling you, APIs, they don't stop you from moving money when you're dealing with APIs. I don't know no other way to say that.
No, I mean I comprehend that. So what I'm trying to understand is if I buy a device or device to send them to you, is it program that's being done or is it just a machine that's being built?
Like let's have a technical conversation about the machine and the apparatus and what you need because it can get technical. And when I deal with machines, I have to know what chipset. I got to know what machine we're talking about because there are some machines that are not. You want to stay away from with this information, and unfortunately, that's what they're selling retail for a reason. You're not going to be able to use the tools on those devices the way they have it set motion. You're starting to hear back and forth about these companies and not having the ability to get chipsets. I give you one. If you get a machine and get me the specs, or you have a machine that you want to run this on, I just need the specs so I can tell you which way to go. Then we can get into a real linear conversation about who shot John and how to do it. Cockpit is an interface. It's a server interface. That's how you protect all your data. And these are all tools that developers use for cybersecurity purposes. Some of the tools that you buy from the Apple store, whichever product sells Apple products, don't like that type of inquiry. There are ways, but that all depends upon what you have. What do you have?
So when we start using this type of technology and this type of in that type of space, when we're establishing something new, are we still creating or using their applications to become associated with their entities, API, just to connect that and just read in, read out?
Okay. There's 2 ways to gain access, and I'm now no one that's not going into ethical hacking, listen to what I'm saying, but don't do what I say. Just listen. Banking is an idea. Along comes AI that's about to change the way you think about banking. So here's banking as it stands. This, what I'm saying, isn't digital. It's just if you can take what I'm about to say and make it digital, you're bulletproof. Under Regulation Z and Regulation J, under the federal regulations and operating circulars, bankable and marketable securities have to have a verbiage that articulate that liquidity will be provided within 12 to 18 months from issue. Now, if you simply put that on a document, I don't know, a PDF, you encrypt it with, I don't know, an encryption like PDF/A, which is the original format of PDFs. So it's got a PDF/A encryption. Then that PDF is just like the Federal Reserve note in your pocket. Now, that PDF/A document is broken into fields, but all banking APIs exploit value, debtor, credit, address, and all that information. So in your system, you're able to determine what can be displayed and what doesn't need to be displayed, if that makes sense. You determine who sees what and how they gain access to it. And there's a sandbox, a universal sandbox that all fintech play in. You have a test mode and you have a live mode. Now let me explain to you the difference between the test mode and the live mode. Can you move money in both modes?
Yes.
Okay. Live mode is taxable. Test mode, not taxable. Now take what I just gave you and reformat it to what you're trying to figure out which way to interface, because they have to leave the door open in case there's a cyber attack. When do you think banking actually takes place in the bank? Like when you're moving money in the bank, don't they tell you by a certain time if you want to have a wire, it's got to be done by a certain time? What time is that?
Some of them 2.5 years.
If you're on the East Coast, what do they usually tell you in terms of the East Coast? If you try to do a wire, do it before what time? 2 p.m.
Yeah, between 2 and 5 p.m.
All right, so we're gonna say so in our space, all ethical hackers know this. Funds don't move until 2 p.m. Monday through Friday. Banks close at what time? 5 o'clock. How many hours is between 2 and 5?
Right.
Okay. So if the bank in Atlanta, Georgia is tethered to the bank in Jacksonville, Florida, that's tethered to the bank in London, England, and 2 o'clock hits here on the East Coast, and all those other time zones are in different parts of the equation. There's a 3-hour window where money is being moved off book, off ledger, being hypothecated and monetized, and they have until what? 9 a.m. the next day, if they ended up out of bounds in taxable jurisdictions or this, that, and the other, to make sure it what? Don't have a balance so nobody gonna be taxable. Now listen to me real carefully. You know all these people who for some reason or do something that the bank don't like, and they say, well, we have closed your account, knowing good and damn well there's no such thing as a closed account. They just cut off your access to it because every account that has been created, it still exists. You just don't have access to it. They need you to create it so they can create these monetization pockets, because all of these accounts that you no longer have access to is where they park all of this overage, because banks are not supposed to have overages. In that operating circular, only 2% of what's in the deposit, the bank is only supposed to be using. 2%. They get away with using that other stuff when what? That 2 o'clock, that cutoff, that 3 hours that nobody can do anything about because it's in the fold. That's where all the money is made. The AI just simply says that, okay, this money's going to go through 35 to 300 transactions. Each transaction guarantees a 2.5 to 25% rate of return. So if you let this go for the whole 8 hours, this is what you're going to have. This is going to be taxable. You got to move that money. So if you don't have an account simultaneously attached to it that you can ping and move, you're going to be responsible for the taxes that is accumulated. Now, in the public, they don't talk about 7-day rollover accounts in terms of how they really are. Just like they misinform the public about CDs. They tell you CDs for savings. CDs are not for savings. They're for investment enhancement. They tell you it's for savings. And they go in one ear and out the other. They have apparatuses that allow you in an electronic format to never lose your equity. It's just when you leave the table, it's like going to Vegas. Vegas is allowed to participate in the institution of gambling because you're doing an exchange of fiat at the door. And you're playing at the table, not with cash, but with what? Tokens, vouchers. It's the same thing here. You're gonna do all of this exchanging at the door, at the court, with your paperwork. Then you're gonna have a token that you're gonna walk in the room with. I don't know, a bill of exchange, promissory note, hell, equity in real estate. There's plenty of ways to play the game. You got your token. And as long as you're using your token in the game, it is what it is. It gets real and taxable for some people when you gotta what? Get up and cash out. But what if you can win and let your holdings stay in Vegas and simply call the bookie and say, well, look, I did real good at the crap table last week. Look, go down there and see Bobby. He's got these chips, right? Take those and go use that to go buy me a Ferrari. He's like, okay, because he ain't got to do anything in and out of the system. He just got to verify this, that, and the other, and the third. What I'm simply trying to explain is that when you understand accounting, the system gives you every piece, every token, every form you need to do valuation that all of these data mining organizations are going to use. But they got to get you disinterested in the metadata. The faster you become disinterested in it, you become uninterested in it, that's when it has the most buying power. When the public becomes uninterested in something that is elodial. People are perfectly fine with having split equity, split title on stuff. Remember, they don't want gold and silver. They want what gold and silver can buy. So the type of devices and systems that you use, there are sandboxes, there are parameters and protocols you can use to move value in both test mode and live mode. You're going to let me know when you go live, and you're going to let me know whether you're in test mode based upon what you're doing. I can't tell you one or the other. I'll tell you as an ethical hacker exactly what you were doing, but we're not having that conversation. It's still a little convoluted. I got too many new people that may misinterpret what we're saying and get themselves in trouble. Have you ever used PayPal? You ever used PayPal before?
Mm-hmm.
Have you ever had to go on the PayPal's website and find your PayPal client ID?
No.
Okay, well, see, I can't have that conversation with you. You've never done that before. Have you ever?
Doesn't mean I can't find it. I mean, like,
right.
It's in your profile.
Yeah, it's like I can have the conversation me and you want to have. I can't volunteer it. You got. I need. Let's say it like this. Okay, if you go to Bill.com and open an account with Bill.com, and then you want to move value from a newly established account, they're gonna give you a sandbox, a free one. That's live. And when they give you a live sandbox, you can move equity. So if you can go to Bill.com and establish an account, they give you a sandbox where equity can go in and go out. Now, as long as you don't fall in love with the how do I do and simply use Bill.com as what it is, not only will you learn something, you have mastered what I've been trying to give you in this short conversation. Bill.com is a system for accounting firms. So it's like the place where you take your value, they step in as your bank, your front end. So if somebody wants to touch value, they're going to log in with a password and so forth. They're going to put their credentials in. You don't have to keep it. They're going to put it in. It's going to create an API key. And it's going to tether that account to another account simultaneously. And the transaction is going to convey. Now, that Bill.com system is for accounting firms, because accounting firms are a lot of these institutions that are hired by corporations to what? Make accounts payables and receive accounts. You ever heard of this thing like Georgia Power has, like when you're paying your utilities, they had this thing called Bill Matrix. You ever heard of Bill Matrix? You ever heard of them before?
Yeah.
Perfect example. Okay, now we can talk. Okay, Bill Matrix is hired. I can hire Bill Matrix and give them my LEI, and you can come with a bill of exchange. And as long as you know the 8-digit parameter, you're able to give Bill Matrix your bill of exchange, and it'll credit into my corporate account. That making sense to you?
Mm-hmm.
Okay. Because the tools that you're using in this developer AI space are merchant tools, just like you heard of merchant services. There's a whole set of tools that exploit value, like those credit card machines are tethered to merchant service accounts, which are paying agent accounts, and they got different parameters. It's just companies like Visa, MasterCard, and so forth got their hands in the cookie jar, and they charge to move value. That's all. Again, what's stopping you from setting up a Western Union account? Error and opportunity. You see what I'm saying? No, error and opportunity, that's all.
So let me go back for a second.
Mm-hmm.
So when you were saying like that 3-hour window,
yeah,
where basically, I guess they would call that high frequency trading is going on.
Right, high frequency trading, no oversight. Right.
Right. Okay. So once that event period is over, which it has to be done before the beginning of business the next day. And
he asked the right question too. He caught it too.
That overage account. So the overage amount, can that actually go into a zero balance account?
Yes, because, it can. It can go into zero balance. So you asked. I was just saying you asked the right question. So I'm gonna give you one. Write this down. Banks are not allowed to offer you 7-day rollovers. But when you go down this event that you just stated, you're in the 7-day rollover provision. Now, let me explain the 7-day rollover the way it's supposed to be explained so everybody will understand the importance of it. Using that window of high frequency trading and nil oversight, meaning no oversight. Whatever you accumulate, as long as by 7 a.m. the next business day, it has been moved, you won't be taxed. The 7-day rule is you can keep accumulating it, but it must be moved by the 7th day of original issue. That's when those CTRs become SARs on that account. See, they got a different reporting with 7-day rollovers. Every other transaction is being reported when you do it. 7-day rollovers, they're reported every 7 days. That's why On the 6th day, you want to have already moved it to a brokerage account and bought stock with it. That was what you was asking, right? That's what you was asking.
That's exactly what I was asking.
Okay. I thought that's what you was asking.
I've been looking at this is for the class. I've been looking at Truist, right?
Mm-hmm.
Truist offers zero balance accounts, but they offer you a really interesting structure. You get actually 4 zero balance accounts in one account.
Right.
One account.
Right. And again, since you said it in class, if the bank doesn't offer zero balance accounts, they're not CECL compliant. You said it, so I just confirmed it because I'm a member with FASB. If the bank you deal with don't offer zero balance accounts, they're not CECL compliant. And if they're not CECL compliant, I ain't saying run. I'm just saying if they're not CECL compliant, whatever you got in it ain't yours.
So what about brokerages?
I'm going to say this again. If the brokers don't offer zero balance accounts, you ain't got to go home, but you got to get the hell out of there. See, the financial tidal wave, it's like, okay, we're all at the beach, right? You done got out your car, you done got the kids out, you walking to the beach. Now, when you pull in the parking lot, plenty of clear blue water, sand. When you finally get to the beach, you seeing beach whales and sharks and boats. Like, where did the water go? Now, in about 0.3 seconds, you're either going to go like a wandering pedestrian, where did the water go? Or you're just as fast as you came to the beach, you're going to get back in your vehicle and you're going to seek higher ground. We're all at a beach. And there ain't no water.
It's a tidal wave coming.
Right. Ain't no water now. So some people going to get back in the vehicle. Others are going to say, well, where did the water go? It was just here a minute ago. Maybe it's over here, So the system is designed to do what it came to do. And you got an equal opportunity to save yourself and everyone else that's near and dear to you. Citizens Bank isn't the only people that can't get their money out the bank. I can't tell you until tomorrow what they said today in terms of what we had a meeting about this morning. What I can say is there's a direct correlation between why it's so easy to buy property with USDA and all these politicians are upset about it. There's a correlation. They lowered it so anybody who's breathing that find property in a rural area can qualify in the USDA if you have a certain income status. Because you can't make a certain amount to qualify. They made it virtually impossible for you not to qualify for a USDA loan.
That has to be U.S.
Say it again.
For property in the U.S.
That's for property that can be. That's for any property that is a parcel that's being sold that can be zoned for USDA use, for agricultural use. Raw land. Okay, USDA does have an overseas acquisition, but I must say it this way. If you want to make a farm property outside the United States district fall into that scope, Go Capital has a loan product for foreign territories. And then once you get the approval with Go Capital, then take it USDA. Just swap the paper. I can't tell you how to commingle. I can say you got to have 5 acres that you're at least doing agriculture on for it to qualify. Any other questions before we jump out of here? Okay, no more questions. With that being said, I'm going to take one last question and then we're going to go. Let's see. Miss Empress, can you hear me?
Yes, I can.
All right, talk to me.
Okay, first, what bank did he say he was going to, and you can have 3 0 balance accounts? I can't hear him.
Truist.
Oh, okay, Truist. Okay. Now, let's go back to the brokerage indemnity bond, indemnity agreement.
Mm-hmm.
Okay, on that UCC, that we take that application / really it's the broker agreement.
Right.
So I want to walk through that real quick, just on a mental. Okay.
Mm-hmm.
So if I'm the one holding the indemnity bond, then I'm the creditor.
Correct.
The company is, so that would be Go Capital or NAC.
Right, they're serving as surety. Right, and you're providing them an M3 asset as the bond. They'll finance that inside the loan. So the 1% cost, it'll be financed in the loan. They get the M3 asset as collateral in case the person don't perform. They got a security they can make liquid that day. And you get a guaranteed loan approved because it didn't matter where their credit was. You brought enough credit or collateral to keep them at that 10% disposable income threshold. Because all software is tethered to, I can't lend you money where you're spending more than 10% of your disposable income. That's why you bring that indemnity into the fold. They do loans over that amount, but that's why the fees are off the chart. Interest is different, and then we get into a whole different algorithm and conversation because there's a different intention. The software it has a default that if you bring X amount of assets to the table and collateral, it will put you into that position where you're only spending 10 to 30%. But I'm telling you guys, stay in 10% range for a reason. There's other programs in there. Yeah, we can get it approved for 30% of your disposable income all day. I'm trying to give you the best rate. So 10% of your disposable income is supposed to go in that direction. So again, 10% of your disposable income, people who are debtors, they're talking about what they're getting on their paycheck. People who are creditors are talking about all those accounts that got FDIC insurance that can be used at that level. So what's 10% of $250,000?
2,500.
Okay, so if you got a checking and saving, that's $5,000. If you got a checking and saving, that's $10,000. If you got a checking and saving investment account insurance, get it?
Mm-hmm.
Okay.
So I get that part. I guess what I'm trying to make sure I understand is, okay, I already have an indemnity bond on the record, right? And so I just mentioned that in the collateral and state that per such and such contract,
right,
this indemnity bond.
I'm exercising my right of indemnity, right?
I'm exercising my right of indemnity. Okay, which means now you can be you can act as a subrogator or
right. Your contract with Go Capital, so you can bring to the deal the surety necessary to close. It's guaranteed to close because you brought the surety.
Right. Okay. So now in that space, now we have these clients that have proof of income and they're making this amount of money, they qualify for this. That indemnity bond covers whatever the difference is.
Right, to get them the best rate possible and get them at that 10% disposable income threshold.
Okay, so, but we're adding their income. We're just bonding up the process to make sure that if something falters, that they don't do something right, then they're insured by our indemnity bond.
There are 10 ways to get out of a loan if you do it this way. All of them are all done with UCC filings. The easiest one is if you do a loan and utilize this process, an 8302 tax return pays off the loan. Wash, rinse, and repeat.
So let me ask you this. On your 8302 returns, how quickly are they coming back? And I know nobody can really kind of pinpoint the Internal Revenue Service, because they're at this point doing
Yeah,
what they want to do.
all we got to do is make the fax and filing. Getting it into the system for implementation is easy. UPS usually delivers the instruments within 1 to 3 business days. That's all we need. See, we're not waiting on funds from the Treasury.
Oh, you're right.
That's what I'm saying. Right. That's what I'm saying.
Collateral.
Yes. We don't need what's coming from the Treasury. That's debtors waiting on stuff from the Treasury. You don't
Right.
have to do
You can
that.
take the return and
Right. You just
what's
take
called
the M3 asset and take off with it. That's all you're supposed to. So as fast as UPS can deliver it.
Gotcha. Okay. I yield.
All right. Beautiful. Love the questions. Look, if you're loving what you hear, man, hey, stay engaged. More exclusive content is coming. With that, I'm going to say peace and love, family. Peace and love.